All right, traders, I ended up finishing the week very strong with a $4,000 profit. It's been a phenomenal week. I ended up making 6 trades today. My first trade would have been my best trade if I held it a little bit longer, but it was a small $1,500 loss. After that, I had 5 wins in a row and I called it. I'm going to be recapping some of the trades, some of the strategies that we use to profit within the stock market today, day trading the SPY. I'm also going to be sharing with you some of my upcoming analysis that we are planning to trade heading into next week. Let's get straight into the analysis. So in terms of the callouts, they were so spot on and so 100% on point. In terms of my first trade, it was put options. In terms of the reason why I decided to do puts at market open, I will get into that shortly. Let me explain to you in terms of what led up to that idea in the first place. So in terms of the SPY, as people who had some key levels for puts, we were interested in doing puts when it would test an initial level that has never been retested, that people aren't familiar with, and we were expecting some rejections at these levels. Our first overall level was at 438. You guys know we've been discussing the 438 level, and the first time SPY tested that 438 zone, it rejected and reacted as a resistance, I believe, for 2 days in a row. And then when it finally did it enough, it finally had its breakout. And then I told you guys the next level for puts is going to be the low of this daily candle. If you look at the daily chart, you can see if SPY breaks above this resistance, it can go all the way up to the next resistance, which is at 445.80, right? See how the floor of this is at the top of the resistance, meaning if the top of this resistance breaks out, reacts to support, then it's going to try to go to 445.80. But another level where it can potentially top out at, this is going to be the zone, is this support level, the low of this candle, where the craziest the craziest bull trap was created at $443.50. Once this key previous support level cracked, it was a massive sell-off to 438. This was a support on the daily chart that was never retested. It just blew right through. So the zone for puts was 443.50 towards yesterday's highs, and we banked on that. I alerted puts at the exact high of day at 3 p.m. yesterday, and I did the same thing again. Unfortunately, I got stopped out for a very small loss, and as soon as I got stopped out, it got absolutely crushed. But it's all good, man. You know how it is in terms of trading in the mornings. It can be extremely tough, extremely volatile, and the bears have been getting wrecked in the mornings lately. So that's why I had such a tight stop just to play it safe. But in terms of our zone, our new zone for puts worked out absolutely phenomenally in that previous support level, in that new key level that I gave you guys. In terms of the short zone, it was 443.50 to 444.50, has now worked successfully for 2 days in a row. And what gave me more confidence to do puts at that level at market open is because, like I said, it rejected our first 438 level 2 times, and then eventually it had its breakout. So it's likely going to try to reject the next level, and the next level is even higher and better at that 443 to 445. So that trade was all made off the daily chart. Now, in terms of my confirmation, in terms of trading what I see, so I just explained to you on why I was interested in shorting there and doing puts. And if you watched my video yesterday, we absolutely crushed it on puts at that level, while minis got destroyed on puts yesterday. In terms of confirmation, in terms of trading what you see, was there a reason to do puts? Yes, absolutely. The pre-market highs was at 443.25 towards yesterday's highs, and yesterday we had a very nice drop, and during extended hours we had a massive little gap down. We had a 4-point drop from yesterday's highs. It nearly retested, it rejected, it formed a double to triple top towards the market open. It already gapped down massively. This was at 440, right? So it already sold off 4 points. If it's going to instantly spike back up and gap up, held up on thin air, the most likely outcome is it's going to top if it rejects the pre-market highs. And then in terms of a valid confirmation is to look at the previous closing price and see if it's reacting as resistance. So they cracked it. They cracked under the previous closing price. They filled the gap and they cracked it. And then once it spiked back up, it was the new lower high and it reacted as a resistance, which was a great confirmation for puts. SPY gapped up. It rejected the pre-market highs towards yesterday's highs. It formed lower highs at the previous closing price. It cracked under the previous closing price. Lower highs went under. These are all great confirmations to play puts into. With that being said, in terms of what ended up happening was I played those puts, directly towards market open when this was at 440.50 into this little drop here. And then it had a little spike up, and I said, you know what, I'm just going to play it safe. I'm going to get out. And then as soon as I got out, it got crushed. That's just what can happen in terms of trading during the most volatile hour. It's not an easy hour to trade. It's something where you do have to look to size in a little bit lighter, and you will typically get stopped out in more situations due to the higher volatility. So you can try to scale in. If you usually do, 2 contracts, you can do 1 contract at a specific price. Then you can add 1 more at a specific price. And you're going to want to wait a little bit and use valid confirmations. Again, I jumped the gun as soon as I got in. It spiked a little bit. I said, you know what, I'm going to play it safe. And then I lost $1,500. Then from there, I had 5 wins in a row, and the trades were so spot on and 100% on point. A lot of people actually made money from my trade on puts because they held it just 1 minute longer, and then all it did was crash. So that was just an unfortunate situation for me. But like I said, man, my worst times as a trader, for me specifically, is the market open. It just fluctuates too fast. It can be rapid fire. Anything can happen. A lot of chops. Sometimes they're just straight up, straight down. It's not easy. You got to be super sharp, use the right confirmations, get in and out super quickly, and you need the perfect entries. It's not an easy time to trade at, in my opinion. Now, in terms of some trades that I did end up capturing, believe it or not, all my wins, I had 5 wins in a row. It was basically from call options. All I was doing was hitting calls, and I was doing extremely well because I was bottom ticking these calls at the exact lows on these like green bullish candlesticks, and even on some of the red ones towards the lows when it would spike back up. So in terms of what made me buy calls towards the low on one of my trades, this was a really good one. I'll show you. So SPY was dropping, right? SPY was dropping on the 30-minute chart, and you can see right here, SPY was dropping on the 30-minute chart. So it's having an overreaction to the downside. It's having an overreaction to the downside. And I noticed when SPY forms like this bearish candlestick, look at this like bearish 30-minute candlestick, and it has this little wick at the bottom, and it looks exactly how it looks as it's downtrending, right? It typically spikes after the next 30 minutes. And that's exactly what happened. And that's why I played puts towards the opening of that 30-minute candle. So I want you to compare, what's going on. See how SPY is downtrending. See how SPY is downtrending. Then it forms this red 30-minute. It's the way it looks. So just study how it looks visually. And I think we can all agree that this candlestick right here looks the exact same. And remember, it was downtrending, forms the same 30-minute bearish candlestick. It looks the exact same with the little wick on the bottom and the tiny wick on the top, tiny wick at the top, tiny wick at the bottom. And you want to keep in mind, this was at previous resistance. Previous resistance that was never really retested was right here at $441. So what's likely going to happen is it's going to try to bounce off that previous resistance since it had such a strong breakout to $440, and this is going to be the first time it's testing that previous resistance. It's likely going to have a short-term bounce. Even if the overall trend is going to be bearish for the day, it can have a quick micro bounce for scalpers to get in and out. And then I also align that analysis and thesis with the 30-minute pattern. The 30-minute pattern said the next candle is going to be a green bullish candlestick, and surely enough, it was a green bullish candlestick. So I decided to play those calls basically as soon as this 30-minute candle closed, with the anticipation that history is going to repeat itself, the pattern is going to repeat itself, it's going to flip green, and also with the anticipation that this previous resistance that has never been tested but finally tested is going to react to support. And what gave me more confidence that that was happening was they closed the 30-minute above that level, and it was already forming support and forming wicks on the 1 minute to 5 minute at that key previous resistance. And then the 30-minute pattern gave me the confirmation that they're going to try to spike it. That was a very nice trade I had on calls. Keep in mind, I made all these trades on my phone, so this all looks visually different to me when I'm doing these recaps and stuff like that. But in terms of the main ones, those were the main ones that I kind of did want to address. Another one was just kind of like how this 30-minute looks reversal in the middle, and then you could say this 30-minute looks reversal in the middle. If you also go back to extended hours trading, it formed like that same candlestick, I believe, yesterday. Let's see, like that 30-minute trend reversal. It must have been another day. I saw it. Let's see. Was it yesterday? No, it wasn't yesterday. But another confirmation was how this candle looked, and what we've been saying is they're going to try to retest it back to the high of this wick, and it formed a nice little top wick here, and it had like a trend reversal on the 30-minute, and then it goes back up to retest the high of the wick, and then it sells off. SPY's been doing that for over a month now. Whenever it forms these top strong wicks, it likes to spike back up. Even in the pre-market, it formed a top wick here, and it spiked right back up to the wick. And then right here, it bottoms at this bottom wick right here, goes a little bit under, but it's spiked higher. It loves topping and bottoming at those wicks. Even on these bottom wicks right here, reacted as a bottom later on throughout the day temporarily. But those are the made trades, and then I have some nice trades on calls later on throughout the day. So in terms of the overall trend was bearish. But in terms of my trade alerts, these were phenomenal callouts, man. I was getting 50 cent. It was spiking 50 cents plus from my entry, and I was selling just for a quick 10, 15 cent profit in terms of SPY's price. But I was making $1,000, $1,500 a trade. So yeah, you don't even have to maximize, man. If I tried to maximize it, I could have made $4 to $5 grand per trade on 5 trades in a row. They were phenomenal entries, literally bottom ticking, and it was a phenomenal day, man. We had a great day as a team as a whole. That's the overall main recap. Like I said, there was more wins, but in terms of recapping them, I wanted to share with you the best ones and the most educational ones. Some trades just can't even be explained. They're just so micro and so 1 minute focused. And like I said, it just looks completely different to me when I'm looking at this desktop, because this is how I don't trade. If I made video lessons, on my phone, they would probably be fairly more accurate. It would look a lot smaller and less ideal for you guys unless you trade on your phone. But that's another thing as well that I'm considering. But anyways, in terms of SPY heading into next week, what do we need to understand? So we now have finally a red bearish candlestick on the daily chart, and we have a double top at this key 444 level. Now, last time SPY topped out at one of our key levels, it did quickly recover. This time it did not recover, but this is what I need you to understand heading into next week, and this is what's going to help you a lot. This level right here, this is key. Right where the low of day is and the high of this. So 439.06 is the high of this, and then the low of day is 438.97. So basically, we're going to be eyeing this zone. This is the zone. Write this down. The support is going to be $439. The resistance is going to be $439.46, the previous closing price. If this zone breaks down, cracks, reacts as a resistance, forms a lower high, it's going to drop. They're going to drop it to about 436 to 434. It'll likely try to bounce off of 436, but it will drop. If it cracks under that 439 zone, spikes back up, forms lower highs at 439.46 to 439. If it trades in that zone and reacts as a resistance, it's bearish. Now, if we maintain above 439.46 and it holds and it reacts to support, then it would react bullish. In terms of how the overall chart looks currently, it's not the most bullish chart. And the reason why I say that is because it's actually quite the battle in a sense. So disregard what I just said, but this is what I need you to understand. There is so much support in the pre-market at 440, but we cracked. We did crack that support. And now it's reacting as a roof. It's reacting as a ceiling. It's reacting as a resistance, which is bearish. But as you can see, $439 was a previous major resistance level, and it's still reacting as a support level, but it's trying to form lower highs, and they're trying to turn these pre-market lows into a resistance. So this is the battle zone. The battle zone, the battleground, is this 439 is your support. Your middle is the gap, 439.46, key gap, close reverse, key gap, close gap, fill level. And then your exact roof is $440. Those three levels. So if you see the lower levels, or if you just see those levels in general, struggling, failing to break out, forming lower highs, forming bearish signals, cracking through, spiking back up, forming lower highs, then it's puts. But if we ever break above $440 and then it pulls back, they form a floor, they form a higher support, there is no reason to be in puts if 440 reacts as a support. What they would try to do from there is they'll try to see a small pullback at 442.50. They'll try to see a small pullback at 443. If it ever went super bullish, my next crazy level for puts is I have two levels. The higher one is the best one. It's insane if it got this high. And keep in mind, the daily chart does not look bullish right now. So we shall see. We have to determine and trade what we see. Is it reacting bearish or bullish in this zone? But what we do know in advance is we understand what's happening. They're turning those previous pre-market lows into resistance, which is bearish. But we're still holding previous yesterday's high. So it's still fighting. But it's in a very small channel. And it cannot sit in that channel for quite long. So you must analyze that channel and make a decision when you get a right confirmation that you like. And if you don't see it, don't trade it. So anyways, in terms of our levels, if this went like super bullish next week, I have two levels for you. The higher one is the best one possible. So our levels, you could see right here, look at this, man. We have such a beautiful play and a beautiful chart set up. If this goes super bullish, look at the resistance. So much resistance, so many bull traps. We're already selling off very, very nicely from 444, this previous support level, towards 443.50, right? But that happened at 438 as well, and then they pumped it back up. We shall see. But that was also like an FOMC type of day as well. But anyways, and we do have a daily bearish candlestick as well. We didn't have that last time, so those are things to keep in mind in terms of history. It may not repeat itself. But look at this, man. You have so much resistance at 445 to 445.75. That's my next zone for puts if it goes super stupid bullish. If it breaks above 443, 444, goes super bullish, I'm trying puts at 445 to 445.75 if I see the bearish confirmation. Now, in terms of I don't need any confirmation, I'm just getting in. This is like your best level. Look at this, man. The reason why I say this is the best level is because this was a resistance level that triggered the craziest bull trap where it just sold off so hard from, man. $450. $450? Are you kidding me? This went from 457 to 437 in one day, and then the next day it went to 425. That 450 key nice whole round number is your drop zone, man. That would be the best level possible for puts if SPY goes super bullish. But look, man, I got my alerts set. I hope you have your alerts set for your sake. And when these alerts trigger, I'm trading. And I'll trade 450 puts without any confirmation. And I'm keeping an eye on that 445 because there's a lot of resistance and a lot of mini micro bull traps at that level. So if it tests 445s for the first time, it's likely going to have a little drop. If it tests 450 for the first time, it's likely going to have a nice drop. Based off of the daily chart as of now, I would say that this is bearish, but we must trade what we see and react accordingly to what we're seeing. So if we're not seeing a confirmation, we must react in terms of doing what we're supposed to do if we do not see that confirmation. If we see a confirmation, we must react in terms of, okay, is the price right? Is this a good time to be trading at? Okay, let's seize the moment. Let's execute the trade, right? So what you need to understand is the daily chart on the daily candle looks bearish. Last time it did this though, it looks bullish and it spiked back up, but it does look bearish on the daily chart. That's the main difference. But I'm saying last time we kind of rejected our key levels, we did pop back up. But this is the main thing that you just need to understand, man. Your pre-market lows is 440. Your previous day highs, so excuse me, not the previous day highs. The highs from June 14th. That's what I was referring to, not yesterday's highs. The highs on June 14th was at 439. This is what you need to be aware of, man. 439 is major resistance, and it's sold off very hard. But once it breaks above 439 and they form the bullish wick, that means the bear trap is getting created because it's forming a floor and support at the previous roof, at the previous resistance. And we all knew the next level for puts was at 444 to 445. Therefore, if you hold through that bullish confirmation you have puts, you deserve to lose money, and you deserve to lose a lot of money the longer you hold, especially when there's no reason to hold and the next level for puts is 443, 444, and you're seeing bullish confirmations at 439, you're going to hold to that, you're out of your fucking mind. So that's just respecting risk management, and we went off on that in yesterday's video lesson. So right now, in terms of what we're seeing is, we're seeing a roof, a ceiling, a resistance level at 444, but it's still holding 439. Now, overall, it's been forming lower highs. We didn't go back to yesterday's highs. We've been forming lower highs, and we've been topping towards previous closing price, and the daily candle looks bearish. So the bears are trying. They're trying to take over. They're trying to take the trend for the short term for a little bit. That's what they're trying to do. We also have some wicks that haven't been retested. We have a nice little wick that hasn't been tested at 435. So we shall see, my friends. So our job as traders heading into Monday is to determine if it's forming a floor at 439, if it's forming a resistance at 439. Now, if we see it struggling at 440, we can try to hit puts. With a very tight stop. If it goes above this, you're trapped. If it goes above 440.40, you're trapped. Do not hold fucking puts through that if it goes above that. Because you can just see, look at the chart. If it goes above 444, this is going to blast off to 442.50. You don't hold puts through that. You respect the move and just get out. Look for strong bearish confirmations, right? So we're looking at 440 resistance. We're looking at the middle of the gap, 439.50. And then another idea could be if SPY has a nice drop. So say it has a nice drop, right? So let's just draw this out. Say it has a nice drop. It has a nice drop like it did right here. It had a very nice drop. towards this 439 level. If it cracks, look for it to pop back up. If it cracks and it pops back up, that's going to be they're going to try to form the new roof. See how there was support at 440 and it cracked, and then it popped back up. That was the new roof. That was the new lower high. Play puts, right? So if they do that at 439, you can do that for puts. Play puts on the V. When it retests and forms that V, hit the puts with a very tight stop. You can also keep an eye on 440 and that 439.50. It's a better level, but you need strong confirmations that it's reacting as a resistance. And what you need to understand is, in terms of respect, you need to pay your respects. If 439 to 440 is reacting as a resistance and they're cracking through and it looks bearish, it's going to have a nice little drop. If 440 breaks out and they form a floor, right? So for example, it breaks above, remember the previous ceiling was at 438, it breaks above, bullish bottom wick at previous day highs, no reason for puts. What was the next resistance level that Will said it's going to go to? 443. Okay, so are we going to do puts? Are we going to hold puts? No, we're going to fucking cut our losses if we're in puts, and we're going to wait for the next resistance level and not hold our hopes and, potentially receive big losses because it might not fake out and have a false breakout like it did last time. Respect what you see. Trade what you see. Trade the chart, not what you think. React to what you see, not what you want to see. The market does not care what it is that you want to see. You can have a plan, and we can have great levels where we are interested in doing puts or calls, and we're going to want to see bearish or bullish confirmations. But we must also trade what we actually see. Now, in terms of trading what we're not actually seeing, I will say I do believe there's some plays without any confirmation where you can enter at your own risk. For example, in terms of what I see on the daily chart, I see, this 450 level. This would be like the craziest level for puts possible, whenever it decides it's going to hit 450, whenever this year, right? That would be the craziest level for puts possible. And in terms of, not seeing a bullish or bearish confirmation, what I do know is, in terms of trading what I'm not seeing, just by looking and making plans in advance, one thing I do know is at key specific levels that have never been tested, there's likely outcomes. In 450 hasn't been tested and it triggered the craziest bull trap. So the most likely outcome without confirmation would be, in terms of how I play my cards, if I wasn't even using a confirmation. In certain trades, I would do this, but I like to do it on initial reactions, the first time only, when people don't expect this and they don't prepare for it. If 450 puts went out of the money, and this tested 450 for the first time in God knows how long, since 2021, and this triggered the craziest bull traps, I would like to do puts there because they're likely going to reject it. If the bulls are winning and it's just going parabolic, it's likely going to have a small little drop at 450. Now, it's a lot more advanced than that, but that's just one thing I would know in advance. I would also be interested in doing that at 445.75 to 445.50 because so many bull traps were created for the short term until this went higher to fill that gap towards 450, right? So I'd be interested in that zone for the first time. The key with doing that is the first time it hits 438, it started dropping 2 days in a row. The first time it hits that key level I gave you, 443.50, 444, it starts dropping. The key is the first time in terms of trading what you are not seeing, if you're not seeing a confirmation. Now, if you're seeing confirmation, then you can go for it. But it gets a lot more complex and deep in terms of what it is that I'm talking about. That's only touching the surface. But that's what I needed. That's what I need you to understand heading into Sunday. I'll give you more updates. That's my current thoughts. That's my current analysis. We're going to read the zone. We're going to read the floor and determine if it's bullish and bearish. And we're going to be trading at what it is that we're seeing, right? So that's the game plan, and that's what I'm interested in doing, right? I will see you guys within the next one. If you do want to be a part of Trader Society and use this weekend to, invest into your education, you can also ask us questions within the chat. Us and the moderators will be there as you're going through the video lesson library, the courses, the risk management position sizing course, learning how to trade options, learning how to trade stocks, small caps and penny stocks, and also SPY, learning how to, in terms of price action trading strategies, gap trading strategies, the candlesticks, the gap trading strategies, it's all within the course, along with the Discord server, the moderators. Every single trade I make is alerted in real time. And the way that I make my alerts real time is I post my plan when I'm preparing to make a trade. I'll post the levels I'm looking at and the time that I'm planning to make it. And then I will literally type out my alert before I make the trade. It's all premeditated trading and it's all strategically planned, just like these videos in advance. I will type out my alert before I make the trade. As soon as I execute the trade, I click one button and the alert goes out. It's as real time as it can basically get because I type out the alert before I make it because I know exactly what I'm going to do typically minutes before I do it. So that's the game, man. And it's all 100% real time. And you will see when I'm buying calls for reversals, I'm buying into red candles and it reverses very quickly. When I'm buying puts into green candles and it reverses very quickly. I have this strategy where it flips quickly. The candle will look bearish, but then when I get in, it flips bullish and I get the best fucking entry. And then same thing with the puts. In terms of the puts, the candle will look green and bullish, but then when I get in, it flips bearish when it works, right? And then when it doesn't work, I get stopped out very quickly, or I will scale in a little bit depending on the trade. Some trades, I believe, you have to be able to read this, but some trades I do believe that are meant to just be scaled into a sense. Like, yeah, it gets to a point where you do have to cut your loss and respect the max pain. But I have a way, this doesn't work all the time, but I know and understand this. I have a way of seeing something where if it just keeps going against me, I'm smiling and I'm adding more at my next key levels and it will typically recover. And then if it doesn't, then I'll just take a slightly bigger loss than usual. And then small accounts will say, well, oh, I can't do that. My response will be is if we have 2 to 3 levels and you're trading with 3 contracts, do 1 contract at each level, or do 1 contract at the middle level and then 2 contracts at the last level. Or just do 2 to 3 contracts at the worst level possible. And then, well, how do you figure out what the worst level possible is? The worst level possible will be on my second or third ad. And I will typically say in advance, like the best ads. And also, I will typically, in terms of like going nearly all in just for a quick scalp, I don't recommend this. I do this with, further dated expiration contracts, 5 to 7 days at the money strikes. I'll take a massive position size. Typically, when I do that, it works out for the most part because the confidence is there and it's at the best price possible. And then in terms of, well, if you don't want to scale on at all, I'll just give you the best price possible. And if it hits, it hits. If it doesn't, you're going to miss out. It's just I'm in a situation where my account's like just so large, it doesn't even make sense for me to not take a starter position. I don't see the logic in it. Like in terms of not taking a starter position, like I might as well take the starting position if it's going to likely work out. And then if it just goes against me, I can add and then I'll just make more money. Whereas versus if I just wait for a better entry, I might miss out on the play. It depends on your standards, but in my experience, based on having a larger account, I don't mind taking the starter position. And not all my trades are like that. But look, man, it's a fantastic trading day. I literally bottom ticked every single trade except one. A bottom tick means as soon as you buy calls, it reverses for a nice spike. There was only one trade where it went against me a little bit and I only made money because I added, but it worked out phenomenally. So small accounts could do that adding thing if they wanted to as well. And like I said, just wait for the second to third level if you don't want to add, or just wait till I take a super massive position size. It's just I'm in a situation with a large account where I don't mind taking a starter position and being down a little bit, but I will always give you guys the best levels. And if they hit, they hit. If they don't, and then I win on fear of missing out because I took a starter position, it is what it is. You got to decide on what is that you want to optimize for as a trader. But anyways, man, it's the first link down below in the description if you want to start trading with us. I will see you guys from the chat room. From here, I'll be answering you guys' questions. I will see you guys from there.